The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days, and of course, 3 great hours we had there. Plus, don't forget there's that 10 o'clock update by Tom O'Brien live, running through the different indicators, running through the numbers, checking it out, giving you his opinion. Fabulous, right there, 10 o'clock update. Eastern time, of course. And so we had John Logan, Steve Rhodes, Tom O'Brien. I'm coming in for an hour, then Larry Pesavento. We've got programming all the way through the day. Now, the Dow is down 40 at this particular point at 18,006. What a challenge it's been to get to the 18,104 for new leg D in the weekly chart. We will get there. But today's a very... I would say going into the close last night, going through the evening market, coming into this morning, there were a lot of indicators that said that just on a very short-term basis, as I mentioned yesterday, I'd mistaken that it was peak D in the 120-minute chart of the Dow. That came in later in the day. So now we've got a D, and what I said to subscribers in my overview and market today section, in this quintile right here, I typed in, now it's at peak D, the 120-minute Dow, supported 18,020 to 18,000s, and maybe the 17,780s will be next. Resistance is the 18,070s level. Then if we can get up to that level, we should be able to get to 18,104 for an all-time high. Today might be a little difficult to do. You've got the Fed coming out. You've got the Greek worries going on through the rest of the day. That makes sense. It makes sense. Oh, I see Larry's on vacation. It makes sense to have a little bit of a hiatus that I had mentioned to my subscribers also in my Dow chart that I show every single day, that now just 57 points from a new all-time high, maybe after 5 consecutive up sessions, a little rest is likely. The 17,950s low should hold the support. MACD is strong. Look at the MACD. And the stochastic is now up at 96%. That is really, it's actually 97% now. That's very, very good. That shows internal strength. But when you get the cup formation and you've got your left hand, right hand, Chapman wave price time match with a Chapman wave inside wedge target resistance line, that dashed pink line, that says that by the 19th we should be trying at least to get to the 18,103, 104 level. We'll see if that's going to actually happen. But meantime, back at the ranch, the VIX index, and we pull this back down, the VIX has popped up today to 1674. That's 2 points. That's a big percentage move from the low that was made just a couple of days ago, 2 days ago, at 1469. So I've got to respect that the VIX is in play, and that is telling me that if there isn't commensurate price movement with a 3.2% rally in the VIX, and the Dow is only down 0.26, S&P is down 0.25%, that's saying, hey, wait a minute, maybe people are getting a little nervous for nothing here, because the daily is in leg B, possibly peak B today, and the S&P had a high, all-time high yesterday of 2101.30, and today's high is 2099.16. So everything is set up to say that in February we should make higher highs, and doesn't have to be much higher, but higher highs. Okay, so let's run the numbers down right here. You got the E-mini down 425. See, the E-mini could be making a peak. See if there's no new high today above 2098.75. That leaves leg D, and then we've got to be a little bit careful. But actually, it's not that way in the cash S&P and the cash Dow. You're only in leg B, possibly peak. Now, this is going to be very important because the weekly chart is made a C. In the Chapman wave methodology, let me just show you something I just came across right now. Yeah, there. Just before we came on to the show, I thought I'd have a look at this 10-minute chart. Naked chart, there's nothing here. It's the VIX 10-minute chart. And there was a spike early this morning, 217. What's today? Today is the 18th. So yesterday there was a spike. The VIX went to 16.33 and then pulled back to the low right there at 1:30 yesterday to 1561, hit it twice, and then started late. I just wanted to check here, 65, 65. So this is peak A, peak B, peak C, and peak D. And what do you expect in the Chapman wave methodology? You expect, let me show, watch my pointer. You expect from a down move to go 1, 2, so leg 1 up, leg 2 down makes a peak, A, capital A. Higher high above peak A, and it goes to leg B, pulls back, that makes peak B. So you've got it here, leg A, pulls back, leg B, pulls back, leg C, pulls back. So this is wave 1, wave 2, wave 3, wave 4, wave 5, wave 6 makes peak C, and then you get leg 7. I used to call this the 7-wave form years ago until I found out you can go even higher to an E, F, and even a G. However, D is your objective. Why? Because at D, you can always get a longer and deeper decline, and that's really what's happening in the VIX. And the VIX pulling back says that there's some kind of buying pressure now as opposed to the selling pressure, which was spiking higher. All right, so that's that. Now let's run the numbers. Move the 120-minute chart away. I believe we made a peak F at 2098.75, so you need time to consolidate. And that also says that that rectangle that I've drawn here with the low is at this particular point 208.50. So that's kind of the 87, 86. That's what I'd said would be the lower support levels, and the upper level of 2098 to 2099, maybe 2103 by tomorrow. That's kind of what I'm looking at here. So now we can move this away, the 120-minute chart, and I can run the numbers. Let's do that right now. The Dow is at this particular point down 45 at 18,002. At this point, it's leg B. If by the end of the day you haven't made a new recovery high, it makes it peak B. Look at the MACD, how strong it is. Look at the stochastic up at 97%, and the on-balance volume is coinciding with the rally. Good action. Just made a peak D in the 120-minute chart, so that says, okay, you can take a little bit of a timeout here. No problem with that. The weekly chart has to get to 18,103.46 to be able to start leg D. And I suspect it's going to do that. And the monthly chart is still at E, but if it goes to that leg D in the weekly, it goes to leg F/B in the monthly. My bias right now is to consider that it really is leg B if it makes that high. And that's going to be very important. Why? Because it says that you couldn't get a major top until the summer, if that's the case, because you have to get to a leg D at least. All right. Now the S&P, SPX.X. Before we go to a break, I want to get all this done. S&P possibly making a peak B if there's no new high above 2101.30 today. And that says you should still go to a C and a D to the upside. It has already made a C in the weekly chart. This is where it gets a little, watch out, don't let your eyes glaze over. This is where mine would be glazing over if I was listening. So I'll try to make it as interesting as possible. Whoa, I nearly forgot to mention, tomorrow night, Thursday night, 6:30 to 7:30 Eastern time, for those of you who are possibly interested in having a discussion, well, I don't know if it's a discussion since I'll be doing the talking, but I'm going to be spending that hour, a good chunk of the hour, talking about the comparison between 1929 market, 28 to 29, and the period we're in right now. Is there a correlation? Is there a market correlation? Is there a chart correlation? Is there a Fed a dollar? Is there a correlation between all those other aspects? What about the socioeconomic part of it? What about those skyscrapers? What about the Empire State Building? The papers were signed in August of 1929, as well as the whole downtown Manhattan, Midtown Manhattan, Rockefeller Center, that whole thing. So this is going to be absolutely, the correlations, the coincidences are spectacular, but they are not in the area that I consider to be extreme, the period of excessivity I'm going to be talking about. So that's still to come, I believe. I could be totally wrong, but I believe it's still to come. That's not to say we couldn't have a 12% correction in the market before we really get going on the upside. I'll talk about all those aspects. And if you have a portfolio, any kind of portfolio, doesn't matter how small, it doesn't matter how big. In fact, small and big makes no difference, because I'm going to be discussing just my belief on what I think would be appropriate measures to take and how to take them in terms of preserving your capital, maybe even looking at the aspect of, if perhaps you've been very conservative up until now, how do you avoid getting caught up in the tidal wave that's coming, if there is a tidal wave coming? Or do you prepare for it? Is this a time not to be whittling down, but to be actually adding extra to be able to capitalize on the market going higher? A lot of things to discuss. I'm going to quickly run the numbers. Dow's down 42, S&P's down 4.80 at 2095. Comp index is down 2 at 48.95. Gold is down 9 at 11.99. I told you I see nothing in gold right now. And the fact that it's going down on a day that Greece could be really should be influencing gold as a currency of fear, says, hey, maybe there's going to be some kind of a resolution to the Greek issue. The other aspect is that silver is down 0.09 at 1625. Platinum is down 9 at 1168. High-grade copper is up at 2.62. That's good that copper is up 4.45. Crude oil is down 1 at 52.38, and bonds are up a half a point at 144.5. And the dollar is, at this particular point, the dollar is up about 30 cents. Let's go to Scott in Safety Harbor. Scott, how are you?
Oh, fantastic, Basil. I got in Apple at 123, and I was really nervous, but it had so much momentum. It turned out for me, but it was very nerve-wracking for. Fortunately, nowadays, you only have to have your nerves racked for a few minutes to find out if you're right. Not like the old days, we used to have to wait a couple months, So
you're right. So let's put it this way: that's if you have Apple.
That's if you have Apple. You mentioned the wave and so forth, and as I got into Apple, I pictured a tidal wave coming, but I pictured one of these big wave surfers that go out and ride these 100-foot waves. You might as well get in there, because this wave is it's just so big at this point that it's just not going to collapse. There's nothing that can upset this market, not Al-Qaeda, ISIS, Greece, or anything.
At this particular point, so we've got a break coming up, and you want to look at a stock, and we'll be right back. If you can hold on, we'll be back with Scott in Safety Harbor, Florida, and the Dow is down 41. We'll be right back. As soon as this break is done, talking about tidal waves, I'll talk about that as well.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back, and we are going to go right back to, back to the Futures Hour. I'm just looking at that. Larry, I believe Larry is actually on vacation for his Futures Hour, so I'll be doing the hour. I was going to use that time to do a run-through for tomorrow night, just for the timing, but you know what, I'll do it afterwards. So, yes, I will be on to do Larry's show straight after mine, and we're going to go back to Scott in Safety Harbor, Florida. Scott, you wanted to look at?
Yeah, I wanted to look at Gilead, but before we get to that, I want to mention Alibaba. You know, it's kind of not on getting off of people's radar here in America, and I think they're overlooking the fact that it may not mean anything here, but it has a huge presence in Asia. You know, last week there was an article about the police being used by Alibaba to bully some other internet company who was bad-mouthing them, and CNBC spun that as that's a good thing. When you got the Chinese government on your side, I mean, that's a win-win situation. So
I guess you could look at it like that. You know what I'm going to do? I don't really see anything in Alibaba right at this moment. I'd rather be trading it when it shows directional move to the upside, but right now it's just kind of sideways. So you want to look at Gilead, is that correct?
Gilead, yeah, but Alibaba will be a $200 stock. If Biden's a $200 stock...
I think they have the backing to do that, yes. Absolutely. I'm not sure when, but yes. So let's do this. I'm going to first of all call this peak C1, and then I'm going to go to peak C1. Let me redo that. I must have hit caps C1. And CETA. Okay, now I can discuss it. Gilead, GILD, trading at 103.17, down 66 cents. It's been a spectacular win. It went all the way to 116.83. I think that was in October of last year. It had a pullback to 85.95. Whoa, 30 points. That's a pretty heavy decline. And what I'm looking at here, whoops.
That was a scary decline, by the way.
It was a scary decline because it had only gone up before. It had held the 9-period moving average. Once it slipped underneath the 9-period exponential moving average, and it was only intra-month. It couldn't even stand to be in the cold region under the 9 EMA. It went to 63.50 in April of 2014, having just hit 2 months before 84.88. So it does have these big 20% or so declines. Now, what's really important about this is that I've got it as a peak E. It could recycle, but it really depends a lot on the close in February, because if it closes towards the 100 to 97 area, it'll say, uh-oh, a big struggle going on. Rectangle formation, trading range formed with 110 as the high, and possibly 90 to 88 as the low. That's a trading range.
I see the support as I agree with you, as about 100 at this point.
Okay, so now what we're looking at is that 101.96 is the 9-period moving average in the weekly chart, and the weekly chart, MACD, is trying to turn higher, and the stochastic is moving higher with the price. So that is a positive. But I must now. You have a long position, or you're looking at it?
No, everything I do is short, and once you get a trading range, Gilead will set up a trading range, at least a 5 or 6 day trading range. It takes it about 2 days to get into that range, and then
it's
you
like
can
a
pretty
swing
much
trade,
trade it
correct?
back and forth. It does that. And right now, it's 100 and 104. So that's where I'm at there. But at any time, I see exactly what you're talking about. It can pull back below 100. Gilead's a lot like Alibaba. It brings in tremendous amount of money, and people were worried that the hepatitis drug was being some of the market was being taken by somebody else. Well, Coca-Cola, you can take half their market and it's still making billions and billions of dollars, where a lot of the biotechs, as you know, aren't making anything. I mean, it's all on paper. So this is real money.
So this is what I wanted to tell you in terms of the Gilead price as I see it right now. It's filling a gap, and I'm sure that the gap was it was news related, but it was news related in the sense that it was old news. Why? Because what's happened is that the candle of the 3rd of February with a high of 107.31 and a low of 104.10 makes the 104.10 the gap low, and the gap high is the next day of 100.21. So that 4-point gap was a 4-point gap. What we've got is you've gone to 103.85. Just underneath the 104.10 area. So we're filling the gap. The 120-minute chart shows that it's made an A, B, C, D. Is that a peak there? 103.61, 62. Oh, very interesting. So right now it's at an F. It could be pulling back just a tad. You know what? I'd like to look a little deeper into this stock because it was a great winner. Why it's going sideways, I'd like to look for technically. So do you mind holding?
Yes, I'll hold.
Okay, good. We'll be back with Scott. Now the Dow's only down 31, S&P's down 3.5. I'll be right back with Scott in Florida. Basil Chapman.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're looking at GILD, Gilead Sciences. We're with Scott. So, Scott, during the break, the thing that struck me the most was that the 120-minute chart has done a fabulous job climbing towards the gap down that I spoke about. It hasn't quite filled it yet. This is about where you would normally expect, and I'm going to briefly put in Apple for a moment to show.
That's what's perplexing to me right now, because I'm ready to increase my position right now, but it's at that point where I don't know if it's going to that 102 level or back to the 104. It's 103.20 right now. And you were correct when you talked about the news. It wasn't new news. It's the same news between them and their competitor that's digested differently, back and forth, once a week.
Okay. Yeah, well, that's what happens with some of the biotechs. Not all of them, but some of them have this. It's almost as if if you look at the chart, you're really looking at a news-related chart. But now let me just get to this for the moment, because I just want to say Apple looks to me like it's having a high-level consolidation. It doesn't have to pull back very much, maybe after such a great move, 2 points, maybe even 3 points, but it is acting beautifully here. A little bit toppy, just as I say, in the very near term. And I think that Gilead is a stock that there's a trend line that I'm looking at, and I suspect that it's trying its best. My eye says that based on the weekly chart, 105 is a very important level. That's just my eye. But on a purely technical basis, there's a trend line that says that if there is a rally The level that you need to watch is 105.75. If it goes into the 106s, then immediately the left side high of 107.31 and 107.77, the previous two peaks made in January will be February and January will be the targets to see. But really, it's the trend line that I'm looking at.
So
and
you're looking at 105 as the snap to go higher. That's where I put it at 105.50.
Correct. Yes. 105 is really, my eye just says that on the weekly basis, there's a fulcrum. It looks like a sine wave, and the midpoint is round about 105. And if it can clear 105s, I would say the 105 so that it can get into the 106s, that's going to be really nice action. But I'm still thinking that well, you won't mind, but 108s, in that 108 area, I think it's suddenly, if it gets there, that's where I think it's going to stall again, pull back, and then we'll see if it's able to make leg C in the weekly chart. But leg D, because leg C would start as soon as it gets to 107.78.
So we're really talking about $3 increments, 1 to 103, 3 to 6, 6 to 8.59.
Correct, and I'll tell you why. Because the candle that I'm looking at, the peak D candle of the October of 2014 at 116.83, and it also had a round number low of 108.00, and it closed at 112. All of those were clues that it helped me in October think the IBB would pull back. Well, now I'm looking and I'm saying, okay, that's been a big digestive period. This has been a spectacular stock. It is still walking the 9-period exponential moving average, and that would say that if it can get into the 106, 107 area, there's no telling that this can't, in fact, try its very best to get back to the all-time high. But I would go step by step.
When it does get back to that all-time high, though, as you know, 12, 13, or 14, knowing traders how you do, and I do by now, that most people that got stuck in that at that time, they usually bail out. I try to stay in and then try to make some money, but a lot of people are so upset they got caught at that 12, 13, 14 level that I think all those people are going to rush in and try to cash out, and that's going to bring it down when it gets to that point.
Well, that's the way you would expect resistance. But in the meantime, it's acting pretty well today. It's acted very well the last 5-6 sessions. I think you're on the right track. So, hey, congratulations. You're really playing these very beautifully. I must say that it's admirable, and hope the Gilead works out as well. Thank you very much.
And you are the most entertaining stock show on the radio, on the Internet that I've ever found in the United States, and I listen to 10 shows a day.
Oh. Thank you very much. I'm flattered. Thank you very much. Oh, my God. Now I've got this sitting on me. The trading gods are looking down at me saying, oh, we're going to teach you.
Absolutely. And the British accent is just a plus. Oh,
well, thank you very much. Have a great day, and I really appreciate that. Thank you, Scott.
Bye-bye.
So, folks, let's do this. Let's get into some nitty-gritties here. What I'm going to be discussing tomorrow night in my webinar, this is a free webinar for subscribers, but and let me just show you once again right here, very easy to attend, and you will get my newsletter for a month free right there, front page of TFNN, free newsletter webinar by Basil Chapman. And what I'm going to be talking about, I've not dwelled on this for a long time. I had during the period going into 2007, I discussed it in terms of the real estate market, the housing market. I discussed it in terms of the politicians. I discussed it in terms of, little did I know that when I was grumbling about many of the politicians, included Bush, just included, Barney Frank, the works, everyone was pushing and pushing and pushing housing. Everybody must own a house. And I kept saying, I've owned a house for a long time, houses. And does anybody talk about the roof? Look at the weather we've got now. Do you know what it's costing people in what they're finding out about their ceilings and the roofs? There's a lot going on. You start having a leak in a time like this, the money is like a black hole. You could just keep paying out and paying. You don't even know what's going on. You don't even know where in the roof the leak is. Nobody talks about expenses. So what I'm going to be doing in my webinar, I'm going to be talking about how themes repeat. But it isn't just the themes. It is the action of, sometimes it's politicians. In this case, it's the Fed. and that the relationship of the Fed right now, let me get rid of this, the relationship of the Fed right now is not that different to what it was back in the 1920s, and it's not that different to the period of 1987. Greenspan came in just months before, just before the crash. So we're talking about the repetition of certain sector excesses, and that's what we want to look for. I want to show you the different socio-economic aspects. I want to show you the environmental aspects. I want to show you what are the parallels right now to the 1928-29 period, but what are the dissimilarities? And here's another thing. I'm trying to research it. I'm hunting everywhere. But the theory is that only 2.5%, maybe a little more, maybe a little less, of the general public in the United States were involved in the stock market in 1929 when it crashed. I find that almost impossible to believe because of what I've read. I would go through the New York, I haven't done it for a long, long time, but through Microfictional, I would go through the New York Times and I'd read the column, the financial column. There was a wonderful editor. You don't often find that, who was speaking very positively about the market and then started to become quite, there were these quaint terms that they used. I can't find it right now. I can't remember it. But there were these quaint terms that were used to say the market is a little bit overbought, but they had their own little terminology for it. And buyers are viewing it positively and that kind of thing. And then he started to become quite negative in the July-August period. Great. I'm going to talk about Babson. You know, people look back and say, "Oh yeah, Babson, Roger Babson, who's got Babson College." You know, I often have my Master Trader series over at Babson in Wellesley. Really fabulous facilities. But they talk about Babson as the guy who got it right. I'm going to show you something really interesting tomorrow night. And it's just fascinating. You know, timing is everything. And you're only as good as your last call. It's like playing a concert. I was a professional musician for long enough, I should know. You're only as good as your last concert, last performance. And that's the same with making calls on the market. So let me do a couple of things here. I'm going to show you something that I found at MDY. The other day when I was reminded of it, I had actually been looking at it and then it sort of went off my radar and I was reminded of this again. The MDY is the S&P mid-cap, so 400 mid-cap index. It's called the S&P Mid-Cap Depository Receipts. And it is trading right now at 273.62. It's up 17 cents. My suspicion is it has few of the oil stocks, so it's not as dollar related as maybe the S&P 500 or maybe the Dow or New York Stock Exchange. And as a result, it's not only gone to new highs, it went there before the others, and it's only in B in this brand new move in the daily. I believe it's B. I could call it F, but everything about it says 97% in the stochastic. MACD looks great, and the weekly chart has improved tremendously. The stochastic's at 87%. It's in leg C, and the monthly chart I've put in blue peak A and peak B, and then in gray I've put F and G above those because everything about it, I mean, let me just move this 120-minute chart away. Everything about it says that there's a good chance that this has got more characteristics. Well, the month has to go another week, a week and a day. But look at this. Everything about it, above the 9-period moving average. The MACD is trying to turn back up again. The stochastic's still at 88%, although it's come down from the 90s, but it's still good. The on-balance volume says, hey, start getting your yellow light out, but you're not talking a monthly chart. The yellow light can take months before it turns to a red light. So I'm fascinated by what I'm seeing here. There is a market that is saying there is nothing else in town that we can play, nothing else that we can trade. There's nothing else that we can position ourselves for the longer term. Doesn't matter how long the longer term is, but up until now, almost this next month is March the 6th is the day that we got long. The Dow Diamonds is 66.45, I think it was, the very day of the low in 2009. Of course, it would be wonderful if I could say, and we're still long, or at least a portion of it. Well, we're not, but we held it for 18 months, had a really good gain on that, and we've traded many times. But in the meantime, back at the ranch, it's been the most hated bull market in the history of mankind. I have to say that. Why? Because to be at all-time highs, and the Dow is now just 100 points, less than 100 points away from an all-time high, and to have so many people to go to, I was at a gym this morning, and nobody was tuned in to CNBC. Think of the year 2000. There was nowhere you could go, even stores. I remember, in fact, I remember a barber. I went past a barber down on Watertown Street here, and in the window, not in the window, through the window, I could see the ticker of CNBC. You don't have anything like that. So I'm going to be talking about that maybe there's a disenfranchised, a huge side of the population that's disenfranchised. Maybe it's something else, and I'm going to be talking about that, because a period of excess invariably gets everybody's blood worked up, and we are not really finding that now. You go to parties, people don't really talk about the market. They don't come up to you and say, "Oh, I bought and I made." Nobody's been saying that, as far as I'm concerned, at least to where I go, and that tells me that there should be some room to the upside still to go before we get to that phase. Now let's do a couple of things. If crude oil, so I just wanted to talk about the MDY, and then I wanted to go to crude oil. I wanted to show you something that I think is very interesting. Crude oil has a particular pattern, and chart patterns speak volumes. If you know how to interpret the chart patterns, yep, maybe your timing sometimes a little bit off, a little bit on, whatever it is, but the patterns themselves speak volumes. And if you look at this particular pattern that I'm looking at, where using a phantom peak parallel high, the July 2008 peak D high in oil, the continuous contract, I'll give you the price, it's 191.57, but that price always moves around, because that's why I don't type prices in for the continuous contract. Why? Because the prices are always changing, because they get smoothed out. They are continuous contracts. They get readjusted. So the pattern never changes. The peaks and valleys never change, but the price will change. And look what we've got. We've got peak D from way up, I'll give you the number, but just for now, 191 goes all the way down to down to 64. That is a whopping decline. And then it has a fabulous rally on a percentage basis. It's huge, and rallies to a peak E at 104. So that's from the 64, did I say? Yeah, 64 to 104. That's $40. That is huge. And then what happens is it pulls back and it starts another single move up, a right arm extension in the Chapman wave methodology to a peak F, and that takes you all the way to 116. Then what does it do? It pulls back, then bounces and starts this H that goes to a lowercase h to a lowercase m pattern until it breaks down. Now, I drew this in. I better just change it because it looks like it's there for a reason, and it is there for a reason. That is a measured move, and very often you can get a measured move from at least the last H pattern, which would say that from 103 to the low of 64, if you subtract that, that's $50, $40. And you can get $40 down. Oh my goodness. No, I didn't even say that. I'll be back straight after this.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, during the break, I got a bunch of comments. One is about Babson. The other one is about Fisher. Yep, on the same day, diametrically opposite opinions. Very interesting. We'll talk about that tomorrow. We even got it in the chart. And here's another one. Your comparisons are pretty accurate, but you're missing a very important difference. Today's market is controlled by fraud, as we recently saw in the billion-dollar bank heist this week. If you don't mention it, you will be doing a great discredit to your listening public. You know, I guess one of the reasons why I don't dwell on that is that it's been going on for so long that I in a way, I just say, hey, business as usual. What can I say? But yes, absolutely, there are certain things that have been going on that are very disturbing, and the way, when you think about what happened to the country through the bank crisis and the fact that there is virtually no one in jail because of it, and you think of parking tickets or whatever it is and the consequences, if you want to rate them and you have your scales of justice, I mean, it's like you've got a ton of bricks on one side and you've got a feather on the other side. It's just, I'm not sure how you deal with that, but it happens with every administration through every single period. There are huge forces out there that basically are saying, hey, if you don't let us get it, they don't say it in words, but basically the result is that they are implicating by saying or intimating by saying, hey, if you mess around with us, other things could really collapse. And that's really the story. And there's a penalty to be paid, and invariably the penalty is paid by the general public as taxes just get raised or whatever it is to make up differences. And I'm not even sure just the context that I want to put it into just yet. I'll think it through. I might not include something like that. But yeah, it's definitely worth, at least mentioning, which I will. But the other thing that is very important is how often in history the fox gets to be the keeper of the gate of the hens or the chickens or whatever it is. It is just uncanny. I've spoken about it many times before, and I think we've seen the most. Just look at the legislation that gets passed and look at the names at the top of the legislation, and then go back and find out which sector were they involved in their particular office. And it's just ironic that the people that were in the very sectors that created the biggest problems eventually come back to be filing legislation to correct all the defects and the problems that in many cases, if they weren't directly responsible for it, they were very much part of the problem. And I just got an IM saying banks got rid of Dodd-Frank, huh? Well, I don't want to get into all that other than to say these things never change. It's part of human nature. It's part of the clout that having a lot of power gives you. It just gives you so much intransigence. You're able to say this is the way it's going to be, and it stays that way because of the power that you have. That's just what power is. It's exactly what power is. I don't know if I want to dwell too much on it, other than to say what we will be looking for is where that particular power is right now. That's what we want to be looking at. I'll be discussing a little bit more of this in the very next segment because I am going to be doing Larry's show. Larry's on vacation. Have a great vacation, Larry. I'll be doing Larry's show for the next hour. And don't forget, go to the front page of TFNN and check out if you want to be part of my webinar tomorrow night on the 1929 match between then and now and the mismatches. I'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.